So in my previous videos, I introduced my investment strategy as a real-life example where I turned $400,000 into $8.25 million. I also introduced the scalping strategy, which one of my peers adopted and turned $400,000 into $7.5 million. Today, I want to introduce you to another strategy called the narrative strategy. Now, I actually labeled this strategy with my own wordings, given it's a unique strategy where you build logics with train of thoughts based on news articles or an event that is happening around us. Another peer of mine actually went from $500,000 to over $10 million within a 7-year time frame. Now, before I go into the details, I want to caveat that while this strategy may seem like the most assuring strategy out there, it requires the most cutthroat imagination based on logical thinking, willingness to endure the most boring period, experiencing ups and downs of share price, and most important of all, off the chart ability to read people's behavior and how the world will change. Now, caveats aside, let's get to it. Let's assume you get up one day and you read a news article saying people's dine out demand is down due to inflation. Now, when you read this headline, what comes into your mind? You might think, oh, people are not eating out as much, or, oh, I guess the inflation is still on its way. Well, to adopt this narrative strategy, you now have to start building your chain of thoughts from here. Now, just a caveat that I'm making this all up just to show you an example, so please keep that in mind. So you start from the headline where it says dine out demand is down due to inflation. There are two key messages here. Number one, dine out demand is down, and number two, there's inflation, so we can break that down into the two sub-statements like this. Now, you should continue to build your logical thinking around from here. Now, on the dine out demand is downside, you can list up the potential consequences which may happen. Number one, dine-in and delivery restaurants will suffer. And number two, cheaper food categories, including fast food, may shine. And number three, given the inflation, people might eat inside their houses more often, which means that hypermarkets like Walmart, which sells ingredients and meal kits, may also shine. Now, on the inflation side, you start building your assumptions here too. What are some implications here? Number one, given the inflation and higher prices, food supply's absolute margin may increase. And number two, given higher end food ingredient suppliers may face falling demand, lower cost food suppliers may gain benefits. And number three, large-scale food suppliers which manufactures in large quantity may have more competitive advantage in pricing. Now, once you reach here, you'll need to pick one or two assumptions which makes the most sense to you, i.e. the ones you believe has the highest possibility of happening. For now, I'll just pick number two on the dine-out demand side. Now, starting again from cheaper food categories, including fast food, may shine. Now you start going down the value chain, which may benefit from the news. Now, given the keyword in this statement is cheaper food categories, including fast food, you start listing all the companies you can think of as a potential company to invest in. I'll list up Burger King, McDonald's, AAA, Taco Bell, and Domino's Pizza. Now, for each of the stocks, you need to check whether they're listed. Now, I can confirm that the bottom four are listed with its name, but Burger King is under a company named Restaurant Brands International, which is also listed. So we can assume that all those companies are available for us to invest. Now here, you pick one or two companies to focus on. When you pick the company, you can take into account of various valuation metrics like price to earnings, EV/EBITDA, cash balance, debt balance, growth potential, and etc. You would just pick the company which looks most attractive to you to invest. For now, I'll just pick McDonald's as an example. Now from here, you now start expanding again with more questions. Who are the food ingredient suppliers to McDonald's? Who are the suppliers of the paper packagings and fountain cups to McDonald's? Who are engaged as the restaurant interior design and construction partners of McDonald's? Now there are probably a million more questions you can list up, but from here, you start listing up the companies based on your research. Then, assuming you found at least 3 listed companies each for each of the questions here, including McDonald's, you would now have 10 companies you can potentially invest in within McDonald's value chain. Now, with the 10 companies you have found, you would assess each of the company based on the metric I mentioned before, including potential growth, profitability, and valuation. Then, depending on how you view each of the companies will perform, you might decide to go all in one of the 10 companies, or you might decide to diversify your investment across 3 to 4 companies within the value chain. This is where another assumption kicks in, where based on your logical reasoning, you would decide which company would benefit the most in the near term. Now, that was a very simplified version of an example of the narrative strategy. To give you a simple recap on what my friend did, in 2017, he identified electric vehicle as a game-changing industry and built a narrative that within the next 5 years, at least 20 to 30% of the vehicles sold will be EVs, which will benefit the likes of Tesla. And Afterwards, battery recycling companies like Glencore will start to emerge as the new growth players. He actually did invest a significant portion of his capital into Tesla in 2017 and exited around 4 to 5 years later in 2021 and reinvested all of that capital into Glencore, eventually reaching total returns of over 10 million. Now let's recap the pros and cons of the narrative strategy. What are the pros? Number one, you just need to identify a single opportunity to bet big. And number two, it's relatively safe as you're investing in established companies. And number three, you don't need to trade frequently as long as you have strong conviction. Now, what are the cons? Number one, it may take a long time until you gain meaningful profit. And number two, your imagination may just end up being a dream. And number three, the macro trend may change, which forces you to change your narrative. Now, that was the end of the intro to the narrative strategy. Now, for a lot of people, I believe the strategy may work, given it only requires a simple habit of enabling a chain of thoughts from a simple news article. However, it does require training, as you need to keep thinking into the deeper layers of the news you read and also make wild assumptions based on your logic. I'll be back with more investment strategies in my next clips.